What to do before you buy your first piece of property. Buying your first property is a major financial milestone. It's essential to prepare thoroughly to make smart investment. Whether you're purchasing a home for personal use or an investment, carefully planning can help you avoid costly mistakes. Here's a step-by-step guide on what to do before buying your first property. First you want to do is access your financial readiness. Are you ready to buy a property? Before diving into the property market, evaluate your financial situation. First you want to do is check your credit score. A good credit score is usually 670 or higher. That don't mean you can't buy a house with the lowest credit score, but to have favorable interest rates, you want to have at least a 670. Review your savings. Ensure you have enough for a down payment, typical 5 to 20% of the property price. Closing costs is anywhere from 2 to 5%. Make sure you have an emergency fund. Calculate your debt to income ratio, better known as DTI. Lenders prefer a DTI below 43%, but it's a prevent as someone's wise, you don't want to be house poor, so make sure you shoot for a DTI of at least 30, 25 to 30% is what you really want to shoot for. Determine your budget. Use an online mortgage calculator to estimate affordability. Consider monthly mortgage payments, your principal, interest, your taxes, insurance, maintenance costs, repairs, utility, homeowner association fees, your future expenses, renovation, property taxes increase. Now you want to get pre-approved for a mortgage. A mortgage pre-approval gives you a clear price range and strengthens your offer when bidding. To get pre-approved, you'll need proof of income, pay stubs, tax returns, bank statement, employment verification, a credit report, compare loan option, whether you want to get a fixed rate or you want to get adjustable rate, FHA or conventional, to find the best to fit for you. Research location and property types. Location impacts property value, your lifestyle, future resale potential. You want to consider the neighborhood, safety, the amenities, the school, the hospital, the public transportation, future development plans, new infrastructure can increase the value. Property type, single family home, condo, townhome. Visit neighborhoods at different times to gauge noise level and community vibes. Work with the real estate agent. A good agent can help find properties within your budget, negotiate better deals, guide you through legal paperwork and the process. Choose an agent with experience in your target area and read reviews before hiring. Inspect the property thoroughly. Never skip a professional home inspection. It can reveal structural issues, foundation, roof, plumbing issues, electrical problems, pest infestation. If a major repairs are needed, negotiate with the seller for a price reduction or repair before closing. Understand additional costs. Beyond the purchase price, factor in closing costs, appraisal fees, title insurance, attorney fees, moving expenses, homeowners insurance, property taxes, potential renovation costs. Make a competitive offer. Once you find the right property, compare recent sales in the area, decide on an offer price. Your agent can help. Include contingencies, financing, inspection, appraisal to protect yourself. Close the deal after your offer is accepted. Finalize mortgage approval. Conduct a final walkthrough. Sign closing documents and pay the remaining fees. Receive your keys to your new home. Welcome home. For additional resources, check out learningrealestateinvesting.com and learn how to get on below market value.